So help us understand now what should be the ideal way how a retail investor should approach the markets. Is it an event now done and dusted? Could there be much more uncertainty in the days and months to follow? And therefore, how should a retail investor be really looking at their portfolios?
Clarify this. I don't think this is done and dusted. Yes, first round has happened. One doesn't know, the full impact. It'll take some time before we understand the impact. Second, I think we don't know how other economies will react. China is already making some noises about retaliatory measures. EU is talking about putting taxes or some kind of charge on services, because services is one area where US has a surplus with EU. And they're talking about taxing services coming out of US. So there will be many countermeasures. We'll have to wait and watch what kind of countermeasures come and where this trade war settles. It's very far from getting settled at this stage. So we'll have to wait and watch. Now, as far as retail investors are concerned, I think it's better to also wait and watch. If you are planning for investing for long term, I think there are interesting opportunities emerging, and maybe if there is some more correction, some more interesting opportunities will emerge. Focus on domestic focused and domestic facing businesses, whether it's a construction, infrastructure, power, cement. Look at these kind of industries, which to a great extent is insulated from the global trade war and global recession and things like that. But of course, if there is a major recession worldwide, India also will get impacted to a certain extent. These companies and these sectors also may get impacted. But the way Indian economy is poised, the way Indian inflation is shaping up, I think some of these domestic facing sectors are doing well and are expected to continue doing well.
Okay, so let me push you a bit. Since you talked about 3 or 4 sectors which are domestic oriented and you believe investors should now focus on spaces like construction, power, our own infra spaces, what are some of the names that one could really look at from these sectors, sir?
Well, Larsen Toubro in the infrastructure sector comes to my mind straight away. I think it's a good company doing well. They recently won the largest possible order from Qatar. There are these orders, new orders which are coming from international market are for additional margin, increased margin. So overall margin profile of the company is changing. So, it makes sense to invest in Larsen Toubro at current level. Valuation also is reasonably okay. So from a long-term investor's point of view, it's a good buy. If you're talking about power, again, look for the top company in the power sector, which is NTPC. I think it's got a fantastic forward and backward linkages, whether it's coal linkages, which is the backward linkage, or the PPAs for the forward linkages. It's all done. The green energy subsidiary is doing well. Power demand is strong and is expected to remain very strong. The capacity is increasing. So all the boxes it does get ticked, and valuation wise also, it is not cheap, but there is significant upside potential is what we believe. If we have to look at some of the other sectors like a cement, again, I'll say that go for the leader there, Ultratech. The demand was weak in Q3, but in spite of that, they performed commendably. The costs have been managed very well, and Q4 onwards, expectation is demand has picked up, so the performance will be even better. So I think these are some of the names one can look at. These are safe and steady investments under the current circumstances.
Okay, but Mr. Bandyopadhyay, will there be any sectors even in the avoid list?
If you like the video, do like, comment, share and subscribe.